Hello, and welcome back to our channel. Today, we have a topic that's absolutely essential for beginner investors, the power of dollar cost averaging. If you're new to investing or looking for a straightforward yet effective strategy to build wealth over time, you're in the right place. In this video, we'll break down the concept of dollar cost averaging, explain how it works, and show you why it can be a game changer for your financial future. So, what exactly is dollar cost averaging? At its core, DCA is a simple investment strategy that involves investing a fixed amount of money at regular intervals, regardless of market conditions. Imagine you decide to invest $100 every month in a particular stock or investment fund, no matter whether the market is up or down. This disciplined approach means that sometimes you'll buy more shares when prices are low and fewer shares when prices are high. Now, you might be wondering, why would you do this? Well, the magic of DCA lies in its ability to smooth out the ups and downs of the market. Let me illustrate this with a real-life example. Imagine the stock market as a roller coaster. It has its thrilling highs and stomach-churning lows. Now, imagine you're trying to get to the top, representing your financial goals. If you try to time the market and invest only when it's low, you might miss the ride up. Conversely, if you invest only when the market is high, you might experience significant losses when it inevitably comes crashing down. But with DCA, you're like a passenger who pays a fixed amount for each ride, regardless of whether it's up or down. Over time, you benefit from both the lows and highs without the stress of trying to predict the market's movements. To drive this point home, let's look at a real-life scenario. Meet Jane, a beginner investor with a clear goal of saving for her child's college education. Jane decides to invest $200 per month in a diversified mutual fund for her child's education. Now, let's see how DCA works in her favor over 5 years. In the first year, the market is quite volatile. There are months when Jane's $200 buys more shares, and there are months when it buys fewer shares due to market fluctuations. But notice what happens over time. As we move forward, despite market ups and downs, Jane's investment steadily grows. The key here is that Jane didn't have to make complex market predictions or try to time her investments perfectly. By consistently investing, she benefited from the market's overall upward trajectory. Now that we've seen how DCA works, let's delve into its benefits, especially for beginner investors. First and foremost, DCA reduces stress. You don't need to constantly monitor the market, worry about timing your investments, or stress over market crashes. This strategy allows you to invest with peace of mind. DCA can be automated. You can set up automatic transfers from your bank account to your investment account, making it a set-it-and-forget-it strategy. This is incredibly convenient, especially for those with busy lives. Another advantage of DCA is that it lowers your average cost per share. When prices are high, you buy fewer shares, and when prices are low, you buy more shares. Over time, this typically results in a lower average cost per share compared to trying to time the market. DCA instills financial discipline and consistency. It's a systematic approach that helps you stay committed to your investment goals, even when the market gets rocky. Ultimately, DCA is a long-term wealth-building strategy. It's not about making quick gains, it's about steadily growing your wealth over time. This aligns perfectly with the goals of many beginner investors. Now, while DCA is a fantastic strategy for most people, it's not always the best choice in every situation. If you have a large lump sum of money to invest, such as an inheritance or a windfall, you might want to consider other strategies. DCA is designed for consistent, smaller investments over time. If you have short-term financial goals, like buying a car in a year or two, DCA might not be the most suitable strategy. It's best for long-term wealth building. Now that you're convinced of the power of DCA, let's talk about how to implement it. First, set clear investment goals. What are you saving for? Is it retirement, a down payment on a house, or something else? Knowing your goals will help you determine how much to invest regularly. Next, choose your investments. You can use DCA with stocks, bonds, mutual funds, ETFs, or a combination of these. It depends on your risk tolerance and financial goals. Set up an investment account. This can be done through a brokerage or investment platform. Make sure it offers the option to set up automatic investment. Automate your investments by setting up regular transfers from your bank account to your investment account. Make sure the amount aligns with your investment goals. Finally, stay committed and patient. Remember that DCA is a long-term strategy. There will be ups and downs along the way, but the key is to stay the course. To show you the real-life impact of DCA, let me introduce you to Mark, a man who diligently followed this strategy for his retirement fund. Mark started investing $300 every month in a diversified mix of stocks and bonds for his retirement. He did this consistently for 30 years. Over those 30 years, Mark saw market ups and downs, but he stuck to his plan. And when he retired, he had a substantial nest egg waiting for him. In conclusion, the power of dollar cost averaging cannot be overstated. It's a simple yet effective strategy that allows you to grow your wealth steadily over time without the stress of market timing. So, if you're a beginner investor looking for an investment strategy that's easy to implement and can lead to financial success, give DCA a try. Set clear goals, choose your investments, automate your contributions, and stay committed. Remember, investing is a journey, not a sprint. By avoiding market timing and staying consistent with your investments, you'll be on the path to financial success. DCA is your trusty vehicle for that journey, helping you reach your financial goals with patience and discipline. Thank you for joining us today. If you found this video helpful, please like, share, and subscribe for more valuable content. And as always, happy investing!